Hey everyone, today we're going to tackle a big question, and I think a timely one. The question is, can AI beat the stock market? And maybe even more importantly, what does AI mean for the future of our jobs and the way that we interact with the world? Now, of course, no one knows the future exactly, but as I've pondered this topic and learned from the insights of thought leaders in AI and economics, I thought I'd share my current thoughts on the subject. Let's begin by looking at investing today. Most professional advisors and fund managers will tell you that markets are at least mostly efficient. The data seems to validate this by revealing that only a very small percentage of fund managers, something like 10%, consistently outperform the US equity benchmarks over the long run. What that means is those who want less risk are going to go with more passive investing strategies that don't involve much decision making by managers. This can also be thought of as strategic allocation. Those who want more risk of underperformance but with greater potential for outperformance will go with dynamic allocation, which involves significant adjustments to the way that the portfolio is constructed based on changing long-term outlooks. Now, there's value in both. There's value in strategic allocation, like index investing, based on market efficiency, and there's value in dynamic allocation, where managers are trying to find market inefficiencies. But now, AI enters the picture. It can analyze huge data sets in milliseconds, and it can scan the data for patterns that humans simply don't have the time or capacity to do. It can optimize decisions at scale, and that sounds like it could help managers outperform. But here's the key insight. AI only amplifies skill. AI can actually be subject to a lot of the same biases as human analysts and managers. Data mining is just as real with AI models as it is with human analysts. So unless an analyst knows how to work with the AI model by testing out of sample data and determining what's called causation, then AI models also risk simply amplifying bad decisions and poor methodology. A highly skilled manager using AI will likely get even better results, but for a less competent manager, AI simply compounds the effect of their weaknesses. It doesn't magically turn everyone into an investment wizard. Here's what AI does best. It can crunch numbers, it can optimize models, and it can even generate investment scenarios, but it can't set its own goals or interpret meaning the way that humans do. Knowledge itself has limits. No system can verify its own completeness from within. Unknown unknowns exist. Discovery depends on awareness of gaps, and markets evolve in response to information that we can't yet imagine. Even the most advanced AI models that we can imagine need human oversight to prevent errors and systemic risk. Here's an important nuance. At first, AI strengthens dynamic active strategies. Managers who train AI models effectively can uncover market inefficiencies faster and more consistently than human-only teams. But if we imagine a world where competing AI models converge, where almost all models agree on valuations and risk, as well as macroeconomic implications for future timelines, then in that case, active strategies start to lose some of their edge, and passive investing could regain more relative appeal, not because markets are useless, but because there's less premium to capture from dynamic moves. The risk versus reward becomes stacked further toward passive investing. But we're not there yet, and we don't yet know whether we'll ever get there. But right now, there is still a very clear argument to be made in favor of dynamic versus strategic allocation, and even better, the combination of both within a total portfolio strategy. As AI develops, it may favor one side or the other more, but likely won't totally eliminate the value of either strategy. Now, AI can handle routine tasks like reporting, optimizing, and scenario analysis. It can even become a member of an advisor's mastermind team, but it cannot replace final judgment. Humans provide behavioral guidance, perspective, relational trust, and motivation at an energy level of mutual reciprocity that machines just can't replicate. Advisors who integrate AI thoughtfully will actually become more effective rather than obsolete. Even if AI reaches extreme sophistication, even if we hit that theoretical singularity where machines begin to train themselves to be better to an exponential and almost infinite degree, and we reach exponential growth in technological advancement beyond anything we've ever seen previously, it still cannot replace what makes us human. Work gives us purpose, meaning, and fulfillment. It's how we serve others and find satisfaction. In a world such as that, humans may respond in one of two ways. We may reject pure AI replacement because nothing replicates the energy and presence of another conscious human being. People might pay more for human experiences, and we may focus on higher level work, creativity, insight, innovation, and wisdom while leaving routine analysis to AI. Even in investing, if AI could perfectly interpret markets for everyone the same way, the game changes but doesn't end. Instead of trying to outsmart the market, investors would focus more on directing capital toward businesses, causes, and ideas that improve the broader economy as a whole more intentionally, creating lasting value. So, can AI beat the stock market? Yes, if models are well trained and proprietary, but it will never eliminate human judgment. Alpha could theoretically shrink in some areas depending on how advanced AI becomes, but economic value remains. AI won't replace us, but it will amplify the best of human skills. It'll force us to elevate our thinking and perhaps even help us rediscover what makes work meaningful in the first place. The key is wisdom, vigilance, and thoughtful integration. Use AI to strengthen your decision making, not to replace it. Markets evolve, technology evolves, but human insight, creativity, and judgment will always be central. If you want a deeper dive, I've written a full article exploring these ideas. You can check it out in the link below this video. And if you want to follow along and take your wealth expedition to the next level, I invite you to join the Wealth Expedition membership and the newsletter, which I'll link to below. Thanks for watching, and I'll see you down the road.